Hello, everybody, and welcome to this very special live in the office after 13, 14 months edition of the Coach's Playbook. We thought we'd record something special because Mick is in the office. Mick wrote a great blog that you can check out on the Top Step site that's about when should you take withdrawals as a trader, specifically through the lens of the trading combine. So Mick, just to get starting, when do you think people should start thinking about taking a withdrawal?
Well, I think withdrawals are extremely important, and as you find yourself profitable in your trading account, it's extremely important to take withdrawals on a regular basis. However, you do need to make sure that you have built up your account equity to a certain level where you can do so comfortably, where it's not going to affect your longevity in the trading account or your survival in the trading account.
And one example of that is the trailing max drawdown, right? If you're in a funded account, you would recommend getting past that before you take a withdrawal. You certainly can.
Yes, so definitely. With the funded accounts here, anytime you take a withdrawal, your trailing max drawdown goes to zero, meaning you cannot bring your account balance below zero. Similar to in the real world, if you're in your own trading account, if you bring your account balance too low, you're not going to be able to make a withdrawal. But the trailing max drawdowns on our account sizes, 30K through the 150K, are respectively anywhere from a $1,500 starting trailing max drawdown to a $4,500 trailing max drawdown. I'll just pick out the 150K account.
Sure.
I would suggest not taking a withdrawal until you've brought your account balance up to $4,500 because at that point your trailing max drawdown would be at zero anyways. So a withdrawal ahead of hitting that $4,500 in the account, you can certainly do that, but you might be shortchanging yourself on the amount of cushion that you have to operate with.
Well, it affects your risk, right? So maybe you could illustrate a little bit how it would affect your risk if you take a withdrawal too soon.
Well, if you take a withdrawal too soon, again, it goes back to the account cushion. If I'm in an account that has $2,000 and I want to take $1,000 out of that $2,000 account, I can do so, but I really need to be thinking about, is this the best move to make for me? Am I positioning myself in a way where I could survive several losing days, several losing weeks? And for some of you traders out there, maybe you can. For others, maybe you can't. So I always like to think about, when it comes to taking a withdrawal, how many swings at the plate am I giving myself? If I have a $2,000 trading account and I take half of that, so I withdraw $1,000, it's great that I'm paying myself. But if on a daily basis I might be risking $500, $1,000, then I'm not really setting myself up for success, because I could lose half of my remaining account balance in one day, or I could lose all of my remaining account balance in one day.
Taking withdrawals can affect the amount of risk that you're allowed to take when you trade. But really the highlight of the article for me was you explained how important it is to pay yourself. So why is it important to pay yourself?
Well, it's extremely important to pay yourself first and foremost, because that's why you're involved in these markets. You're here to take money out of the markets, put money in your pocket. It's what your goal is while you're trading, it helps with a number of things. It feels, psychologically, it feels pretty darn good to take money out of your trading account on a regular basis and be able to use that for real life stuff, whether it's buying lunch, paying bills, anything like that. Being able to do that on a regular basis, whether it's a small or a large withdrawal, it builds confidence in your trading. And it also, it helps a lot with the risk management. When I know that I'm, supposed to be regularly taking withdrawals, I might not take as much risk as I would if I never was thinking about taking money out and paying myself. So, for example, if I'm having a very good trading week and it's, only Tuesday and I'm up, a few $1,000s on the week, only in the second trading day of the week, and per my withdrawal schedule, I know Friday I'm going to try and take a withdrawal. Well, with that $3,000 I'm up on the week already, I'm going to protect those profits, because I know anything, any of those profits from this week is going to get put in my pocket. So I'm going to be I'm going to play defense with the money that I'm already up. I'm not going to risk all of it. I'm probably not even going to risk half of that with the remainder of the week. And that way I know come Friday I can take a nice withdrawal. Probably, if I'm only risking half of that, I'm going to be walking away with $1,500 maybe. Hopefully I can continue to add to that. But that kind of mentality might make me skip a marginal trade. I might think, this kind of looks good, but I'm not sure. Where if I was flat on the week, maybe I would try taking that trade to see what happens. I don't think we should ever really be taking trades to see what happens, but just for the sake of my argument here, I think it's good to be thinking like that.
Right. You want to grow your account, but don't put all your eggs in one basket, right? Because as Mick was talking about, cable bills, you have classes you want to take, cars, houses. No one has ever bought any of those things with unrealized profits.
That's correct.
All right, there's no glory in unrealized profits, and it's been the doom of many a trader. So pay yourself, all right? Do something nice.
Yeah, and one thing I'll say is, when it comes to withdrawals, that over the course of the years, I've spoken to a lot of traders that, build their account up to a pretty sizable amount, say $10,000, and they don't even want to take a $500 withdrawal. Now, these people that don't want to pay themselves $500 might not have a problem losing up to $2,000 in the market. And I never really understood that. If you're willing to risk $2,000 on any given trading day, why can't you pay yourself $500? Those traders that have that mentality, you tend to see them build their account up to a certain level and then give it all back in relatively short order without ever capturing a dollar to put in their pocket.
Yeah, that's not what you want to see.
It's a shame. It's a shame, but it's something that happens somewhat regularly in this industry, especially amongst the retail traders.
All right, so don't be that individual. You can read Mick's articles on the Top Step blog. And Mick, thanks so much for stopping by today and talking a little bit about withdrawals.
Yeah, thanks for roping me into the office, Jack. It feels good to be back in here and talking with you guys.
I need some company after that second vaccination. All right. Have fun, guys, and trade well.